Welcome to Cerius Leadership, where we bring you the tools and insights to lead your business with confidence. Today, we're continuing our strategic advisor series with Joanne Stockdale. Joanne, you're a seasoned banking professional who really knows the ins and outs of supporting businesses through the various growth stages with deep expertise in relationship banking, which we'll get into that wonderful buzzword. We're going to really demystify what a strong banking partnership looks like, why it's critical for business success, and really how to maximize the services and the support a business needs. Joanne, it's so often that we underutilize the services of our advisors out there. So I'm so grateful to have you today and really help walk us through how to optimize that banking resource as we're trying to grow our businesses.
Well, thank you for having me, Kristen. I appreciate it.
We hear a lot, we hear it in commercials, we've seen in advertisements of banks saying it's a relationship.
Mm.
And whether they're talking directly to the consumer or the business, this is not when you walk in, the teller's going to know your name
Right.
type when you look at where banking has gone to, it's so transactional. I've got it on my phone, I get alerts. I'm just not walking in and the teller's knowing my name anymore, especially as a business owner. What does a strong business relationship look like at that business ownership level as I'm growing it through each stage of my business?
Excellent question. And you hit the nail on the head in the sense that it is a buzzword. I feel like a lot of banks out there are throwing around the term of relationship banking, but not really delivering on true relationship banking. And in my opinion, what relationship banking really is truly getting to know your client. And like you say, it from the very basic level of when you walk into your bank, the people know you, they greet you, they welcome you into their technically office home, right? And they know your typical flow of business. They know what your activity looks like, and they know if something's out of the ordinary. And so when you're building more of that relationship where they actually know you, they know your family, they know your friends, they know if you're a business owner, they know all of your key people that are handling a lot of the day-to-day transactions. And then they're there to protect you. They're there to help you navigate your business in a more efficient and effective way, essentially. When you don't know your banker and you don't really have a relationship, it ends up becoming very transactional. And for some, they're like, I'm too busy. I don't need to interact with my banker. And frankly, I've heard multiple people even say they're like, I don't want to be bothered by my banker. It's like the banker's kind of that negative word, which is like, am I the dentist?
Yeah, look, I'm busy running my business. I deposit money comes in, money comes out. We transact it on your portal, and what do I really need you for? That's also
Right.
that might be great when my business is two, three, $4 million, but and I just as it's growing, I don't really know when to call you. I don't know what of my problems or what of my risk you can help with because at first it was just money in, money out.
Right. Right. Well, and even then it's really to have a true good relationship with your banker. It's really good in all stages. And it's going to be the matter of level and maybe frequency that you're interacting with your banker as you're maybe not even first starting out, because there's a lot of ways that you would need a true relationship banker at all different stages. It's just going to change. Like I said, I think it's going to change in the matter of frequency and probably the level of needs. But what's nice is like we can kind of talk about like from the very basic to the more complex. So on the very basic, we think of what I think of when I think of a relationship bank. I think of like really good customer service, right? So not just knowing your name and knowing kind of the basics of how your business operates, but really being a good point person for absolutely everything. So having truly a relationship banker, kind of that you're partnered with, you name it, whatever comes across your board or your table, and you have a question on it. It's like, okay, do I go to a chat? Do I go to an online chat? Do I go to an 800 number? Do I call my local office? And then if I call these numbers, who am I going to get a hold of? And then are they going to pass me on to somebody else? 9 times out of 10, if you don't really have that relationship with your banker, the answer is yes to all those questions. You're gonna try the chat, and then you're gonna find that the chat's it's time consuming, and you failed miserably, excuse me, because it didn't answer the questions you were asking. Then you try the 800 numbers. They're going to send you to different silos depending on what your ask is. And then you call your local office and they're like, well, let me see if I can't find your banker. And let me see, like, oh, you're talking about your business account, not your personal account. That goes to somebody else. So think of all the time we waste on trying to solve what we think is maybe something so minor as like, I got locked out of my online banking page. I can't complete this transfer. For some reason, the ATM isn't recognizing my PIN number. I mean, again, these are all like very basic things that happen, and they do happen. They happen on a regular basis. And if you have that really good relationship with your banker, you can call them and they will take care of it. And that's kind of my, 27 years of banking. And I've been at a couple different banks, but that's how it's always been approached, is like, let's deliver on the true relationship, the customer service, so that people have that one point of contact to go to for absolutely everything. So whether it be something so minor as like those things I just mentioned, but then it gets to something bigger as you're growing and there's more activity and you're worried about, do I trust my CFO? Do I trust my bookkeeper? And should I have fraud protection on my account? Should I be setting up dual controls on my accounts? Maybe when you started off your business, it was really just you as a one-man show or woman show. And then as you've grown, you've now started to hire more people, and you're needing to get some of that stuff off of your plate and onto the plate of your team. Well, how much control do you give them? These are all great discussions to have with a true relationship manager from your banking side of things, to really partner with them and say, what do you suggest? What have you seen? What works for other clients that are in a similar situation as me? And it really doesn't matter what industry you're in, because these things are important to all people, personal, business, small, large, medium size, doesn't matter. Like I said, it's all really important, because at the end of the day, we are all working hard to grow our business, to grow our income, to support our families, and to protect our wealth, to protect our hard work and our earnings, and not have it washed away.
And you mentioned some triggers and risk mitigation as we're growing it. I want to get into some of those triggers, because I'm not just the only one doing it now. I've got someone else. How are
Yeah.
you doing the approval? At what point? It used to be that I only need to approve $10,000 and above, but 3 years later, that might need to be $50,000 and above, because it's causing these friction. What are and a lot of what you mentioned is something went wrong. I'm reactively now need someone to fix it. From a proactive perspective, because anytime we're proactive and we solve it before it happens, it never happens, and we save all that time, that money, that worry. What are some of those triggers in my business to be proactive, to call you or call my banker? Or how often should my banker be calling me what's that list of questions that you're walking through? Has any of these 10 things changed? And I
Right.
need to get on top of it for you.
Excellent question. So let me take a step back and kind of answer the first part of it, because when I first mentioned it, I was talking about building that true relationship with your banker, right? And the reason I say that's important, and that's important from day one, in my honest opinion, because these triggers and these things that we're going to talk about next, they happen all throughout your career, right? But if you don't have that established relationship up front, then you don't know what you don't know, right? And so then you're kind of operating blindly. And so it's really great to have that relationship up front. So then you can kind of get to what was your next question, is when do I then reach out to that banker that I've established my relationship with? So that's why I just kind of wanted to highlight the importance of establishing that relationship, so that you know who to call for, again, absolutely everything. And they will guide you. If they're a good relationship manager, they're going to guide you into the right areas to focus on. So again, if it's something more trivial or it's something more complex, maybe it's not their specialty, but they're there because you've got that established relationship, right? And so it just makes it, from a business owner's perspective, it makes it so much easier that you're not having to try to start with navigating who is the person I go to. And then the next step is like, do I go to somebody about this? Like, or is this something that I go to a consultant for? Or do I go to my attorney for? Like, do I go to my fellow entrepreneurs and talk to them and say, what do they do? It's like, so these are the times that it's like, yes, you've established this great relationship with your banker. Now I'm going to go to them for all these type of questions that come up. So it's like, yeah, I'm starting to hire new people. Like when I opened up my accounts, it's just me on them and I've been able to manage it. Well, now you're starting to grow and you're realizing that, again, time is money and our most important commodity. So now you need to start dumping some of that onto others' plates. So now you're starting to hire people. That would be a great trigger to set up some time to chat with your banker and walk through what you want to do now that you've got these new people. So as you're growing with staff, and then get kind of the comfort level, because again, the good banker is going to talk to you about like, okay, well, how well do you know this person, and how much are you going to trust this person, and how much safeguards do you want to put in place? Because again, depending on that stage of that, bumping up your staff, you may want to keep very low limits. Like you mentioned, having approvals for 10,000 above. Maybe you want to keep it even smaller than that to start off and kind of see how things go. And then as you get more confident and, comfortable, maybe you have another discussion and say, hey, why don't we revisit this? Because I need to see if there's some other things I can unload onto my staff, B, remove some of the frequencies in which I'm getting involved, and then just become more efficient, right? And so then you're going to want to have those ongoing discussions as you're ramping up, so that you're, again, protecting your business, protecting what you've worked so hard for. And also, because again, with all of us as bankers, we have all the horror stories, and I hate to say that word, but it's true. And so that's where it's good to have that relationship where you can go to them and say, hey, I trust this. I trust my CFO, or I trust my bookkeeper with my life. Like, they've been with me forever. And so I just want to give them full authority. That would be something that I would come back and say, I wouldn't advise that. I think it's great that you trust this person with your life, and that you've known them for years, and that they've worked with you for years and you've never had any issues. But I always want to advise that it's like, look, things can change. Money changes people, period. I've seen it within family dynamics. I've seen it within, their employee dynamics. We've all heard the stories, through the news. We usually hear the bigger ones, but again, being in banking as long as I have, you see a lot of the other ones too, where it's like, yeah, I trusted him so much, so I gave him the full authority to transact on my behalf. I never went in and monitored my accounts. I just left it to them, and that was it, right? Well, then they find out later that their bookkeeper has been skimming off the top for years, and it was like they didn't notice it, and they weren't protecting themselves. They weren't monitoring the accounts. They weren't being the final say in what was happening on their accounts. And then they're coming to the bank and they're saying, where's my money? What's happened? And of course, it's like, you want to blame your bank. But again, it kind of going back to, how we started this whole discussion, it's like, you have that good relationship, you have a good, open dialogue with them, and that you're talking to them about them, and they're giving you their opinion, and hopefully you're listening to them and treating that as a true partnership, that really we want to see you guys succeed. Like, your success is our success. And so we want to really be that partner that's there to protect you and give you these examples that, like, hey, you don't want to necessarily give all of the control to anybody. Like, you always want to be the big guys.
Circumstances are different. So I imagine you've got some best practices from doing this for some years and seeing those horror stories, seeing it done differently, that if I did want to be able to not be involved in the process and the transaction and the approvals, they can do that. But then here's some checks and balance on a weekly basis. Here's the report you're going to pull. Let me walk you through what to do next, or on a monthly basis. Do you have kind of that playbook of, if you do decide to take this course of action, here's some ways that you can still protect yourself? It just might be slightly after the
Absolutely.
fact, but certainly it's not going to be ongoing.
Yeah, absolutely. So there's a lot of different things. Like there's different fraud protections to put in place. I always say, like, if somebody's really adamant about being completely out of the day-to-day transactions and approvals, then I say at a bare minimum, you should go into your accounts. I always say, for especially for businesses that have a lot more activity, I say daily, just skim through your accounts on a daily basis to just kind of monitor that nothing really jumps out at you that's out of the ordinary. And if everything's fine, that shouldn't take too much of your time, and it's the least invasive, as far as, like, you're not having to be pulled out of meetings to approve something, and you're not having to initiate anything or release anything. So that would be the bare minimum, that it's like, at least go in and monitor daily the activity. And then again, that's worst case scenario, if somebody comes to me and says, like, I don't want to be involved in any of it. And I hear the words all the time, I trust my so-and-so implicitly, and they can take care of it. So I still say you should still double check. But then I say there's other ways to even implement different levels of security within your team. So you can have it where there's only up to certain thresholds that they're allowed to there, or let's start with the initiating. So if you're wanting to initiate a wire, for example, that you have to have somebody else, like, you have to have everything under dual control, so that you have to have, if you're having one person initiate a template of a wire, then you have to have somebody else on your team be the approver, so that, again, you're not giving all control to one person. So try to kind of divide it up to where you may not want to be involved very much. I still say, like I said, monitor it, be present so that they know that you're almost kind of watching everything, but then put levels of protection within your team. And so that there's more than one set of eyes. You have to get somebody else to approve entering in information, or you have to get somebody else to approve the actual wire before it goes out. And then you can even go extra levels of putting in dollar amount thresholds. So it's not just the information of the person, or adding a new person or a new payee. It's certain dollar amounts to that specific payee. So it's like, I'm going to add, I'll say on, like, a personal basis, let's say you're adding a new housekeeper, and it's like, well, I'm fine with you guys paying the housekeeper for us. That's no problem. But I'm never going to send over X amount to that housekeeper. So you're going to be capped at how much you can send to that person. So there's a lot of different ways that you can really implement into those different levels of security and approvals, so that you're protecting your accounts, even if you're not wanting to be the person that's involved heavily. Then there's also other fraud protections, not just with the online platform. We have things like positive pay, and there's positive pay for checks, and there's positive pay for ACH. And not to get into the weeds too much about either of these products, but it's essentially just another level of security to line up with every check you've issued or every ACH you've sent out, that when it starts to clear your accounts, that it lines up, and it's something that you had already issued and you've uploaded it to the system.
We're talking a lot about fraud. I think because both of us have been pulled into, once it happens, it is tough. Once that cat's in
Yes.
the bag, it's tough to get that cat back in the bag and get it rolled. And it's the business itself,
Yes.
liability, and just the time and attention that it takes away from the business. We've
Absolutely.
seen that, whereas it's so, when you're proactive about it, and really, Joe, I would expect my banker to be doing most of the work to set it up, by doing the
Yeah.
work and being the one to train my team, being the one
Yeah.
to monitor it initially. I'm going to put some of that onus on you, because you're the expert on
The
that.
expert, absolutely. And they should be responsible for it.
So as I'm continuing to grow, we've got the checks and balances, and it's interesting how often that comes up when we'll put a fractional CFO in it. That's the first thing that they're double checking. The
Right.
next piece that we really run into a lot and see with banking relationships is I'm going to invest in this. I'm going to buy a building. I'm going to do an initiative that's going to change the look and feel of my balance sheet.
Yeah.
How does that impact my line of credit? How does that impact a loan I want? What are some of those things where you can talk through proactively, say, you're going to buy equipment, are you going to lease it or are you going to buy it? That's going to end up on how will that look on your balance sheet? Because so many businesses don't understand that balance sheet and proactively say, I need to make sure I stay within these thresholds for my banking relationship to be able to get whatever cash management I need at any given time.
Right. And that's again, we'll go back to the first thing we touched upon. So it's again, having that relationship. And I can't emphasize it enough, because then as you're going through your business and your regular flow of things, whatever it may be, I'm thinking I need commercial credit cards, or I think I need to issue my employees credit cards. I think I need a line of credit. I think I want to buy this piece of real estate. Do I want to occupy this piece of real estate for my business, or do I want to make this an investment so that I'm leasing it out to somebody else and so I can get on the returns? How is this all going to impact me? And I think a lot of people, what they end up doing is it's kind of more of the reactive to, they're wanting to go down this path of getting any sort of financing, getting any sort of debt. And that's not a bad thing. I'm not saying that. It's just the timing of when you're trying to get it. It's like the phrase that I've heard multiple times is like, a bank will lend to you when you don't need the money, right?
Bingo. And not when I need the money. I cannot tell you how many times I've heard that saying.
Right. Well, and there's some truth to it too. It's like, again, banks are in business too, and they're not, and it's a risk, business. And so it's like, well, who are we going to be lending to? So we want to make sure that our clients are, they're cash flow positive, that they have enough liquidity. And again, not to get into the weeds of any of this, but that's where, if you're instead of making the knee-jerk reaction of like reaching out to your banker, now that you've identified a property, let's just kind of talk about a commercial real estate opportunity. And I, again, seen this happen multiple times. I get a call from somebody, it's like, I found a building I want to go into contract in. I'm like, whoa, 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 whoa. Like, hold the phone. Like, let's take a step back. If that same person would have called me when they first started thinking about looking for a building and what their ideas were as to why they wanted to look for this building, then you have that discussion. And again, it shouldn't take much of your time. And I keep going back to time being so important to all of us, but it shouldn't take much of your time to be like, okay, I'm talking to my CFO and I'm talking to my friends and I'm talking to my colleagues and I'm talking to somebody else who did this. That's when you're also you should call your banker. Call your banker and say, look, I'm thinking about getting a piece of commercial real estate. I'm thinking in this price range, and this is what I intend to do with this property. And so then the banker can be like, great, let's start diving into the financials. So get me your financials, they'll put together a list of things that they need so that they can do the deep dive and figure out, okay, what's going to make the most sense for you in your current structure with your business for whatever the opportunity may be, whether it's a line of credit, whether it's a piece of real estate, whether it's getting, a bunch of commercial credit cards, you name it, whatever the situation is. If you start that discussion early, then your banker can help strategize to put you in the best position so that then you can now start being like, oh, I guess I was looking for a $5 million piece of real estate. I really should be looking for a $2 million piece of real estate. Or I shouldn't be doing this right now. I need to wait until I get to this stage of my, my P&L and my balance sheet where I'm showing profit, or I need to wait till I get here. And then it's going to be a better opportunity. Or they may even, like, again, good bankers are going to say like, look, I know you want to buy this piece of real estate for your business, but are you going to be occupying all this space? And how are you going to be able to cash flow on this building when you're the only tenant going to be in it? And do you see how this is going to affect your bottom line? It's not always just the simple like, oh, if I buy a piece of real estate, it's going to appreciate and I'm going to get this great return off of it. It doesn't always work that way. And so that's where, again, going back to having that good partnership and a true relationship, you're having these discussions as soon as somebody brings it to you and it becomes a thought in your head that you're like, maybe I should do that. Maybe I should think about that for my business. Before you go any further, I think that's the best time to reach out to your banker and have that discussion and say, like, what are your thoughts? Somebody was telling me about this and I got really interested. I think this might be great for me and my business. And let them kind of guide you into the right path so that you again can continue to focus on your business, continue to be successful, and look to grow it in the ways that a lot of people need to grow their businesses with acquiring debt, you know?
As you're getting to know the business, I can imagine that you're getting to know the business in a number of different ways, and you get to work with a number of different businesses and business owners. Are you able to provide not necessarily some advice of, I think you should, but I've seen this done 5 different ways. Here were the circumstances. I just had 2 business owners last month, and here's how they ended up structuring it. And here
Yeah,
was my role in it, what I was able to do for them. Because we get so mired down, we don't always know how is everyone else doing it?
absolutely.
What are the
And that's
options?
and then again, going back to the relationship, now that you have this great relationship, these are the conversations that you say it just like that. Like that was perfect, Kristen. It's like you just say like, hey, I don't really know how to get this. This is what my ultimate end goal is. And again, that covers, in my opinion, kind of covers everything within a true, banking relationship. It's like, I'm worried about X, Y, and Z, or I want to get to this. And it's like, so tell your banker what your end goal is in your mind and let them come back with different approaches. Like, and again, most banks offer kind of the same products. There's going to be nuances. And again, when you have a really good relationship and a really good relationship banker, they're going to do just like you're asking for. They're going to come and be creative and be like, look, we just did this, something similar. They were looking for the exact same thing you're looking for. And this is the way we were able to work it. Like, what do you think about this? And if they're like, nope, I can't do that. Like that scares me, or I don't want to tap into too much of that. Okay, let me come back. And then we also rely on, like, again, I'm not going to be the one-stop shop for all of my clients, and I'm not going to know everything as much as we'd like to say I do. I'm not. And so then I rely on my colleagues and my partners, and I'm like, have you seen something like this? And what would you do in the situation? And then you just get the wealth of information from those people. They're like, yes, I did it this way. Why not think about structuring it this way? Do you mind coming in on this meeting? I'm going to have a call with my client, and I would love for you to kind of talk through how you did it and see if this makes sense for them. So again, you're building this great dialogue, you're building this great relationship that you will feel as the business owner that it's like, wow, my banker is actually in my corner. They're actually here to support me. They're really trying to get this done. And if they can't get it done, I'm getting a good understanding as to why they can't get to what I'm ultimately looking for. And again, we have to have those hard discussions too, because it's not always like, just because your business is growing and you feel like you're doing excellent from where you were 3 years ago, it still may have some growth that it needs to do, or there needs to be some tightening up in certain areas, or we need to get more liquidity, whatever it may be. And so having that relationship, the banker can come back to you and say, look, I see where you're going. I have, and I'm thinking of an example that just, recently came across my table that's like, look, I believe in you. I know your business is going to do well. I know you're going to keep hitting these marks. You're just not quite there yet. And so why don't we table this? I flag my calendar. I hope they flag their calendar too, but let's follow up after Q1. Quarter 1. It's like, let's kind of revisit, let's look at the financials, see how things are going. And if it's all going in line with the way I envision it to go, then we might have a deal. We might have an opportunity. We might at least have something that is a starting point. But right now, I can't do anything for you. And here's the reasons why. And so once you explain the reasons why, instead of like, I just got a red email that says you're denied. It's like, what? My business is doing so well. I don't understand this, right? You're having that conversation, and then you're like, okay, unfortunately I have to tell you no today, but that doesn't mean it's no tomorrow, you know?
And there's so often we get caught up in, I'm coming to you and I'm asking you for help with let's say a line of credit, I need that. What's the reason that you need it? I can't get it for you. Well, I need it to do X, Y, Z. There's some other ways that you can do that. I've seen other businesses doing
Exactly.
it. It may not be with this, and here's some creative and everything from you just stretch out your vendors. You need to switch payroll services. There's some other creative ways that you can do that. You said you flag your calendar and they flag theirs. How often should you be reached out to by your banking relationship? How often? Because we talked at the beginning of customer service. I want you to be there when I need you and I need you to solve my problem. To now we're talking strategy and advisory on how do you make sure you're in a position to get the support and what support do you need and what are the creative solutions to get there. How often are you reaching out to your business owners, part one and part two? And is it always the business owner? Does that start to transition, if ever, to say a CFO?
Great questions. So it's not really a general answer. I personally, I like to check in with people at least once a quarter, just to see how things are going. Now, I have had some clients that it's almost like I'm being a nuisance, like they would rather just leave me be, but I will. And you know, again, I have a pretty thick skin, so I'm not offended if they come back and say, look, I'm good, or don't even respond. I've had that happen too. But it's like if they come back and say, look, I'm good, I will check in with you. I will reach out to you when something comes up. And so I like to say once a quarter is always good for any stage of a business owner, even on the private banking side. Like anytime you're, you know, a personal banker, just kind of like, or a personal client, that I can just check in and say like, how's everything going? Is there anything else? Especially if you haven't heard from them. The ones that you're kind of hearing from on a more regular basis, I feel like at least we're engaged enough that I'm like, okay, they're reaching out. So I know that they will reach out when something comes up. I don't feel like they're maybe struggling in silence. And so if I'm not hearing from them, I think once a quarter is good, is plenty. And then some clients, like it can be more, it just would depend. And so that's where it's really going to depend on you as the banker and the client that maybe I'm seeing that I'm like, okay, it looks like it's really beneficial that I'm following up with them on a monthly basis, let's say. So then I just, again, flag my calendar to just send a quick check-in or lob them a quick phone call and just say, hey, I just wanted to see how things are going. Is there anything that's come up recently that maybe I can address or that's been bothering you or a frustration? Let me know and I'll, you know, and let's see if I can work through it. So yeah, again, once a quarter, sometimes more frequently, sometimes less. And then as far as when I'm reaching out to a CFO or somebody else on the team, that really depends too. It's really kind of at the client's direction. Because again, I don't want to ever assume, and I don't want clients to ever assume either that because they have this great CFO that I should just be talking to the CFO. If the business owner tells me like, honestly, Joanne, I don't have time. Can you just check in with Kristen? She'll have, if she has any questions or needs, she'll be the one. Then I will slowly shift to having a lot of my conversations more so with the CFO. But again, per the business owner's direction. And then if I'm hearing from the CFO on a regular basis, obviously that's a totally different story. But I like to keep it with the business owner until they say, hey, I either at least include this person or go to this person, they'll get you more specific answers. So it really has to be, you know, kind of directed by the client, I think is the better approach than me just assuming that what works for Kristen is going to work for somebody else, right? It's not usually like the one size fits all.
It's amazing that how many different situations and you've got that customization. I always like to tell me what I don't know before I make the mistake so I can avoid I love learning from other people's mistakes. I really don't feel the need, especially as a business owner, to learn
Right.
on my own. So before we get to final advice, knowing all the situations that you've seen, what would be the top one or two situations to be able to avoid? And here's probably the biggest things that I see the most often that are avoidable, but they weren't avoided and really caused some damage to the business or a lot of undoing.
Uh, so it's kind of twofold because the first part, I would say, again, just goes back to the to voice, I guess, to reach out and have a very candid conversation, just like you're asking me and saying, look, I want to make sure that I'm avoiding whatever it is that other people have failed on. I want to make sure I'm doing that so that then the banker can kind of figure out like, okay, then what's going to be the best scenario, or how can we kind of tackle this problem? Again, the better communication path you have, I mean, we always hear how important communication is. But the better path of communication and the better relationship you have, that honestly is going to help protect you from so many other issues instead of staying quiet and just kind of suffering through whatever the transaction, whatever the situation may be, because you just assume that this is how all banks are and all bankers, they're just transactional. They don't care about me. And so I'm going to be quiet. If you have that good relationship, and this is probably going to come back to the key final advice, but if you have that good relationship and you have a really good open communication and dialogue with your banker, you're going to avoid 9 times out of 10, if not 10 out of 10 of little issues that can actually snowball into bigger issues. The ones that I've seen the most is, again, I guess where it's been the most detrimental to businesses, it goes back to that fraud. Unfortunately, it's like by not being willing to have these discussions with your banker and to assume that you have these great relationships with certain people and not wanting to take the time to really structure your account in the best way possible to have those different levels of security, authority, approval limits, dollar limits, so that, again, you're protected from all levels. It's just that I just find that so many people don't want to be, and I say people, but I am really kind of referring to the business owners, right? They don't want to take the time because, again, they're busy. We get that. You're busy with trying to run your business. And so they don't want to be bothered by their banker. They don't want to be bothered with the process to, establish an account. And if you have that great relationship and you have that banker that you can sit down with, they will do a lot of the work for you. You mentioned that earlier on in the meeting too, that it was like they should be doing a lot of that work for you. They should be sitting down, asking you the right questions, then structuring your account in the way that's going to protect you the best and that you're going to be the most efficient to grow. So that, again, what time you put in at the beginning of that relationship is going to pay in tenfold in the long run. And so, yes, set aside the time to talk to your banker, build that relationship, set up your limits and authority and approvals so that you're not coming to them at the 11th hour, or you're that person that's like, oh my gosh, if I would have just taken the time, I would have realized that there's an easier way to do this and a more efficient way to do this and a more, fraud protective way to do this, that I'm protecting myself. So that's kind of my 2 things.
And I see that as protecting from the money out. A lot of discussions I'm hearing recently is we're seeing customers delay payments where our cash flow is being stretched out. I can imagine that's a good time to call and say, I'm seeing slower paying. I'm not getting the cash flow in as quickly. Let's talk
What
through.
solutions?
First thing I want out of your mouth is let's talk through your current AR cycle, your cash management cycle. Oh, you still have checks going to that PO box, and then this is happening, and then that's happening. It's delaying your cash receipt by 3 days. Let's set you up
Right.
for this program. You still have 90%, I'm seeing by your statement, 90% of the money's coming in via checks. Here's some best practices in a playbook for getting most of your clients on ACH. You're going to get it
Yeah.
faster. I can imagine all the playbook, the strategies that you have for decreasing that cash management cycle.
And those are all the great times to start talking about like, okay, like, what are you going to see or what are you going to need from me in the long run to eventually get a line of credit? You know I'm early out in my business or I just started, and so I probably can't get much of anything. What other solutions might you have to bridge this gap as I'm growing? And so again, then we can look to structure something else. It's like, well, do you own your home? Maybe we look to, as a temporary, look to put a home equity line of credit on your place, and then you can utilize that, pay your business pays you back. Like there's a lot of different structures. So you're spot on. And it's just like, there's a lot of different options and solutions to meet the needs of business owners and their private banking. It's just maybe not the exact way they want to do it from the beginning, but if you take the time and engage in that conversation, you'll be thankful, you'll be appreciative, because it's like, okay, now that's got me to my next stage. Now my business is at this level, and now I want to talk to my banker again. Let's see if we can't change this again, and let's see if we can't increase the security or whatever it may be.
The examples that you've gone through, Joanne, I can really see how a good banking relationship can be part of that strategic advisor team, and that individual who's looking out for my business, working with my other strategic advisors to do what's right for the outcome that I want, not necessarily into that cookie cutter, well, here's the way we do it and here's how we've always done it, and can be proactive with it. Joanne, I'm sure the stories are limitless. Well, I think we've covered quite a bit for today. We'll leave it at that.
Yes.
Thank you for sharing your expertise, your experience, and it really shows how much you care on finding the right solution, not just fitting it into a cookie cutter
Box. Yeah.
box and product. And it's understanding all the circumstances around it to get, I love that word, creative.
Yeah.
To
Yeah.
get into where they need to be. All the best, and Joanne, I'm sure that we will have this conversation again and ongoing. You certainly know how to ask the right questions, not just what those answers are.
Great. Thank you, Kristen. I appreciate your time too. This has been great.
Until next time.